And so the goal, to kind of clarify, the goal is going to be not funding to start. We're going to be brokering, right? Brokering the deals. So in terms of which funders and which financial companies you're going to use, it's going to depend on the type of file. So the business owners that you're thinking of, now correct me if I'm wrong, but I think, are you not going to do any kind of marketing or data purchases? You're going to go off your own network?
Market too.
Okay. So in that case, there's going to be specific funders like, A and B and C paper. I'm assuming the people, and, the reason I'm kind of prodding is I want to get an idea of exactly where you guys want to go, because you could sign up with the wrong funders and lenders and you'll be wasting a lot of time. I want you guys to be able to hit the ground running. So the people that you're going to be working with, are these going to be people that, that have financials, that are going to be, they have tax documents? So I like the way you think. So on a 50K, the commission can range. It can be, standard for a deal that's under 100,000 is like 12% plus. Most of them will pay you after like 5 draws if it's a daily, or after the week. So for example, let's say we fund a deal today. Most lenders and funders will pay us Tuesday or Wednesday of next week. Some of them will pay us today, and then some, the better quality paper, will pay us. What you might want to do first to get started is called super brokering. So it kind of eliminates you having to sign up all the lenders and funders yourself. It's where you bring in files and then you give a percentage as an override to someone to submit the deals for you that already have the relationships. That's a way that people kind of get started really quickly. They just kind of hit the ground running. So then all they need is the applications and the statements, and they start submitting them. Unless you have an LLC that is, over 2 years old, that you can use for the funding, that's who you're going to want to sign up with in terms of the funders. But it's going to come down to the quality of the files. So I would want to see you get like a test run of what the business owner that you're going to look to fund, and get a few samples, okay? And then, pull some applications and some statements, and then we'll get an idea of who you want to work with. Because, you don't want to make the mistake of signing up with 30 or 40 lenders and, you don't really have a relationship. You want to have a solid 5 to 10 that you really just go to. So like David, when you have a file, you pick up the phone and call, Rob at XYZ Funding. Say, listen, I've got another one. I want to do this. That's what your main goal is to get the relationship. Um, in terms of commission table, because I see this on their commission table, some of the funders offer that, but the main thing you want to know is it's called buy rates and sell rates. Is this making sense? At that point, we can help you find a place to refer you. You want to have someone that you trust, because you want to make sure your deals stay to you, and then you factor in a percentage that you're going to give up for an exchange for having that already. So it might be like, 10 or 20% override on commissions. I can help you find somebody if you can't find anybody. That won't be a problem. Uh, One thing I want to cover is that it's not just going to be the money from the commission. So like, you might get somebody in that doesn't qualify for an MCA, but you're going to help them build their credit, and you're going to charge them a fee of, let's say, 2,500 or 3,000 to build up their credit, to get them ready for either an MCA or an SBA. Okay. Or, you're going to have a guy that already has it. They've got a great credit score. They have all their financials. Guess what? Now you're going to send them to SBA, and you're going to make a nice percentage on the SBAs as well. So you want to look at it as like an all encompassing one stop shop for business finance. And I think, you'll start with your community, but I mean, you can just do very well with, with everybody else as well. You don't have to kind of sell yourself short. You could be the word. She's good, right? She's good, isn't she? um, okay, so the factor rates, they range. So on the best side of the spectrum, they're going to be like a 1.18, which means it's the funding times 1.18. And then on the more high risk ones, it's going to be a 1.499, which is basically like 50%. So, it's tiered in terms of risk. So the higher the risk, the more that the funder is going to charge, right? If you have somebody on one hand that has like a medical company that's doing millions a year, they have a 750 credit score, they have their taxes, they're going to get the best rates, right? Then you have somebody that has, let's say auto dealerships, which are tough, and they have already 4 other fundings, they're going to get the more expensive ones. So it's going to depend very heavily on each file. But so for like an example rate would be, like 100,000, and the factor rate is, is a 1.33. That's the buy rate. So that's where you get it from the lender. This sounds really confusing, but it's not. Like literally, you do it 2 or 3 times, it's easy. So you get a rate from the lender, and then you add your commission, and that's where you sell it at. So if it comes in at a 130 and you add 12 points, now you're selling it at a 142. Okay, so I'll break it down. So like you have a funding for 100,000 from the lender. The buy rate is a 130. So the lender is making 30%. Now David and Rebecca add in 12%, and you sell it at a 142. So you're adding your, and then Nicole, why don't you translate this kind of line by line? I think I can make it easier because I want him to know it sounds complicated, but it's really not. So like if let's say we take a 1.42 rate, right? Forget the one, 42, 42%. Does that make sense? Right?
Mhm.
So okay, so 1.32, just take away the one, now you have 32%. Okay? So an MCA, Nicole, if you could help me on this, an MCA is a purchase of the future receivables. So we're not a traditional loan where there's an annualized interest rate percentage, or interest rate that fluctuates. This is us buying the future receivables of the company, and that's how we can get around the usury laws and charge these very high rates, because it's solving like a purpose. If so, you want to look at it in terms of the business owner will get what he's sort of qualified for. So there's pros and cons to each one. So like on one hand, you might have a monthly payment, 10-year term, and it's 10% interest. It's the greatest, right? Every business owner wants this. But you have to have a perfect credit score, you have to have the financials, you have to be in business a certain amount of time. And then on the very low end, you have the MCAs where it's like a daily payment for 30 days. It's the worst. So there's some type of like meet in the middle here, for every deal. So these rates might sound like really jarring, like scary to the business owner, but if they don't have a purpose, then it's not going to make sense. To take this kind of money, the business owner has to have a need. They have to have like urgency. So like, a lot of the requests and applications we get, the business owner is looking to expand, okay? Or they're looking to cover payroll, or they're looking to cover working capital. Otherwise, they're not going to pay 50% on the money. Why would they? Now there are some that just take it to pay off the other ones, but those kind of trend to higher risk. But I want you to kind of just, see. Sure. So if they don't pay, 10 people are sent to their house, and they knock on their door, and then I'm joking. Um, okay, I'm joking. Okay, sorry. Okay, so if they don't pay, it's good and it's bad, because like this is not there's not really a PG on these loans. I mean, you guys are business owners. You know what a PG is, right? So on your loans, obviously. So you're not signing for this. It's not asset backed. It's not on your personal credit. It's against the business. So if the business stops receiving receivables, right? If it stops being in business, there's really nothing to collect. But it does happen. I would say 20 to 30% of all files will default, and that's why when you originally get the funding, you have certain documents that you need to get to fund it. So you might want an accounts receivable. They might want to know the landlord. It gets ugly when they don't pay. Like they'll contact all the business owners, clients, and say, we're in line first to be paid. If you owe them money. But it's just the nature of the business. So SBA loans default also. So it just kind of there's no really criminal to come after them. There's just legal. So let's say I took out an MCA today and I went bad on it. Okay, so they would send me threatening letters, legal letters, and then they would freeze my bank account until they're satisfied. That's pretty much the extent of what they can do, and then put you in like a collections. Funders, once you find what LLC you're going to use, and then there's lender lists. I can direct you for that also. You can either just sign up with people kind of online at like Daily Funder, places like this, or like for our training we offer a lender list with specific emails of the reps, so we can help you get onboarded with them, because not a lot of funders will take you. And then we give you the list, and then we'll say, you say Sam referred you, or whoever referred you. So we can get into that. And then why don't I just want to make sure that we cover everything. Why don't I go through the questions, one by one? And then that way, so I want to make sure we get your questions, right?
Okay,
Okay.
please.
So number one, which broker will we be working with? We covered this. Which funders, financial companies are going to use? We're going to do the super broker on the data and who. But if they have revenue, usually, yeah, 50 to 75%. You
75?
Yeah, you have to be pretty bad to not get accepted for an MCA. It's like the last house on the block. Um, like I saw a lead come in today that the lady sold cars, but her revenue was like under 14 or 15,000 a month. She probably wouldn't get approved. If she would get approved, it would be for like a micro advance, like 3 to 5,000.
So
Less, but they're going to be small, very small deals, 3 to 5,000, which, it's all relative. That might really help somebody. But for you guys to be making, good money, you want to fund at least at a very minimum 20, 25K deals. You want to fund 100K deals, the big boy deals as we. What's the average approval rate with these funders? I think we spoke about that. If it's good data, you could be at like 60 to 70%. If it's bad data, it could be 20%. It depends
okay.
on who you put in. Um, if you want to focus on tickets starting from 10K, what are the minimum requirements? Okay. So we just covered a little bit with revenue, but usually they want to see, at least like 2 years in business. So time in business. They want to see that they don't have, that their credit is like, above 580, 600. Um, and specifically for a 10K deal, you like 2 years ago, if they had 15K revenue, they would get approved for 10K deals. Now they don't anymore. Like you have to have at least like 20 to 25,000 to get a 10K deal. They just, they kind of tightened up. Um, so 2 years time in business, the revenue, a decent credit score. Does the entrepreneur need to have a social security? If you build relationships with funders, you can get them done with that. But most of the time, you need a social security number and an EIN, an ITIN. As long as they have the social, the ITIN should be fine. But if you want to fund them just off an ITIN, you're going to need relationships. And look, that might be you guys. Like you guys might see a lot of files like that, and you guys are like, look, I want to put 200,000 or 300,000 to work and just fund my own deals. Now you're going to be able to close them faster because you're selling them so low compared to other brokers, and you have a level. There is consumer loans, but it's it's rough. It's rough. It's like 700% interest, and I think it's 70% default, but the 30% that pays you collect on. It's like new territory. I have a partner that does it, the consumer ones, but you don't want to do those yet. They're real sticky. Um, the max funding for a personal is like $1,000, but you just do tons of them, and most people don't pay. So you're just making money off the ones that did pay, and going to collections. But there's a lot of guarantees. You know what I mean? It might be a guarantee up until you have to pay a fee, to get started. I would imagine that's kind of what it is. Now, I'm not saying there's anything wrong with that, but most of the funders and lenders that I know of, they want a social. If there's a super high revenue business, like I think I had a grocery store or a farmer's market, and he was doing high revenue, and he was Mexican. I forget what it was. All he had was like an alien resident card, and I think we got it done. I don't remember. This was years ago, but like you want a social. We have a lot of people that get turned around without a social, but there's other ways around it. Like you can find people to go onto the business that do have socials. If the business is that strong and they become, let's say, the president of the company or own part of the company, and then they might get something for doing that. And you that might be your niche where you have people you trust, Americans with socials, where they're able to go on the business. I prefer those who have social because of value. Yeah, exactly. Yeah, it'll just be easier. But there's other ways around it by getting other people on it. Um, and again, the credit repair is going to be huge for you guys because I think most people, don't have credit restoration services to begin with, and that'll really be big. I mean, you can, I'm asking because we have a lot of Brazilians arriving with a certain income only still Right. Yeah. Right. I got you. Of course. Yeah. Um, I have a friend that has a credit restoration business. He charges 100 per month, and he has 1,000 clients. I mean, it's other ways to make revenue. You're gonna find the best thing for you. So you might start with MCA, and then you're noticing most of the people you bring on need credit repair, or most of them need, help with their financials or whatever it is, and you're gonna add all these services, and that's really gonna blow you up 10 times faster. There's some rules like in the U.S. like you're not allowed to be on the phone with people if you're drinking coffee. Okay, she got it. Okay, I'm just making sure. Yeah, there's some regulations, like Florida, California, New York, Virginia, that kind of make it harder. Um, like they'll make you disclose the amount of commission that you make, which really sucks. I mean, imagine if you're selling 100,000, you're making 12,000, and on the contract it says 12,000. The broker makes it hard. Um, you're not supposed to use the terminology loans or lender, because when you specifically say that, you're kind of invoking that it's a traditional, conventional type of loan. You will always want to say funder and factor rates, but I wouldn't be worried about that. It's kind of like the wild, wild west of financing. There's a lot of people that are doing good, people that are doing bad. As long as you're not kind of BSing the merchant, the business owner, you're going to collect an application that's going to show, and I'll send you a sample, one that we use. But it's going to be the business name, the EIN, the business address, right? The business start date, and then the business owner's information. So the business owner, the business owner's home address, date of birth, social, and then their signature. And then so that, along with like 3 months of the most recent statements. So let's say you're getting someone today, you get the application, and then April, May, and June, full bank statements. I'll send that via email. And I just want to, before we close out, I want to get to the last one here, which is there a platform or software we'll use to manage the clients?
Yes.
Yeah, so there definitely is, and it's called a CRM. I believe it's Customer Relations Manager. I'm sure you guys have that for your businesses. Um, I just wouldn't worry about it yet. I'm very big on like just getting started. Bring in some files, bring in some applications, and then when you have a big database, you're going to need it to manage it. But you can really get started with just an email. Especially if you're using a super broker, it's going to be a lot easier. You'll just bring the applications in, you send them out, and then you wait back for the approvals. So what I want you to do is focus it like your first step is getting the application and bank statements. So getting files. I don't care if they're approvals, if they're declines, if they suck, if they're great, just get in files, right? That's number one. And then number two, it's going to be looking to get approvals on those files. So you're going to cast like a wide net and just going to get anybody that'll send you their bank statements and an application you're going to bring in. And then once you start getting experience with that, you're going to start pricing out to get approvals. And then once you get approvals, you're going to look to get those approvals sold and then get contracts and then start funding. But I'd like you guys to take it like a step at a time. Can you send me the employment contract? My consulting company would be 1099. Yeah. Normally you would. That's if you're gonna bring people on. You're saying to be reps. First step is going to be is getting the bank statements. That's number one. Say send me April. You want 3 months, the most recent months. Sometimes it's four, but to start, just get three, and then say you want to see April, May, and June. Okay,
Okay.
that's what you want to see first, and then depending on how those look, then we'll get an application. And then I'll send you a copy of my application. You can just make one in like Adobe, and it'll say like you guys whatever the name. So I would say to start with the super broker, and then while you have them, start signing up on your own. So we'll make sure the LLC is in place. You have the business bank account and the ID. Is there who?
But it does have any area.
Okay, that doesn't matter. That's fine as long as it has the age. Yeah. So for some of the better funders, you're gonna need like the referrals and time in business. But to sign up with most of them, Nicole, can you explain to them a little bit about like BC paper, and that's how most of the files are, and they're easier anyway, and how he'll get the BC papers no problem. So that's gonna be you guys your skill. Once you guys get the hang of it, you'll be able to underwrite your own files. So like right now, let's say I get an application, it has bank statements. I'm looking at the average daily balances. I'm looking at the revenue. I'm looking if they have other positions. I'm looking on how the month ended. I'm looking at what is true revenue. So that means like, is it, they might have 500,000 a month, but only 100,000 is true revenue. Because let's say 400K went out the door, whatever it was. So that's going to be your own underwriting to classify. But usually what BC paper means is files. The easiest way to tell is files that already have positions. So they're not new A paper that have no positions, no fundings. They have a one or two fundings, and that classifies them as BC paper. That's with all things being equal, of them being like good revenue, good deposits. If they had positions, but if they were like really low revenue, then that wouldn't be BC paper. That'd be like D or F paper. Let's see. I need to ask what BC, and then it's not the greatest. Okay, I need to ask what we need to know about the client to be approved. Have at least 6 months of business with sales of 20 a month, and have such. Yeah, I mean that's for the minimum be doable. It might be like what I'm talking about with you guys, where you might have your own private fund where you can do that because you trust people and you fund it in house. But as far as my experience, I haven't seen that. But I would encourage you to explore that, and I would encourage you to say, listen, I might have some clients. Maybe you're a broker. Sometimes people are a little bit cagey if you're going to say you're calling them to say your competition basically, but you could call and find out what he's offering. It might be real. I just don't know. I've never heard of that. Um, it could be like a payday loan type situation where it's not based. I wait your email for information. Okay, about the super broker, yes. And then I'm also going to send you, just a basic application, and then yeah, I'm excited for you guys. I think it's going to be good. I think you guys are, you're asking the right questions. I'm going to be very happy to see you guys succeed. Is there anything, normally how we do it from here is we do like, weeklies where we check in weekly and go over all the things that any challenges or you need help with. But you can let me know, how you want to proceed. But are there any other questions you guys had for me?